The Supreme Court heard oral arguments on Tuesday in a challenge brought by payday lenders against the funding structure of the Consumer Financial Protection Bureau. Those lenders arguing that the financial watchdog's funding through the Federal Reserve is unconstitutional and should receive appropriations from Congress, an effort to try to stop the agency from working. Though the justices seemed likely to uphold the CFPB's current funding structure in oral arguments, Senator Elizabeth Warren was the architect of the CFPB, and she joins me now in an exclusive interview for Reaction. Senator Warren, thanks so much for joining me. It's great to see you.
Thank you. It's good to be here with you.
Were you heartened at all by what the justices said during oral arguments? Do you feel more assured that perhaps the funding structure of the CFPB will be upheld and that the actions to date are safe?
Well, let me just start with a little bit of background. Remember, this is the agency that has forced the banks to return more than $17 billion directly to people they cheated. It handles more than 3,000 complaints every day. This is what tries to keep people safer on their mortgages, on their credit cards. And the folks who've resisted them the most are the big banks and the payday lenders, the ones who largely prey on our young military members, for example, who need a little money until the next payday and find out that they're often paying 300, 400%, sometimes even as much as 1,000% interest on these loans without understanding that up front. So the payday lenders brought this case. They claimed the problem is that Congress set the CFPB up so that the funding doesn't come through appropriations. Instead, it comes from other bank fees and so on through the Fed. The problem with that argument is that's the case for every single banking regulator. It's true for the CFPB, but also for the Federal Reserve Bank, for the Federal Deposit Insurance Corporation, for the OCC, for all of the bank regulators, and it's been true throughout our history, dating back to our very first banking regulator in 1863. So yesterday at least gave me heart that the justices seem to understand that if they knock down the CFPB over its funding, they got a real problem with everything else in the financial system. And then, just to make it worse, turns out Social Security is not funded through appropriations. Medicare's not funded through appropriations. So the Supreme Court, if it decided that the CFPB can't do this, they could upend not only people's lives, but also our entire economy. So I hope that makes the court more cautious and leaves the CFPB intact so it can keep doing its good work on behalf of the American people.
Yeah, to your point, Senator, I mean, what sorts of consumer protections would be exposed here? What would be obliterated? In some of the research I did, it seemed to be that if Director Chopra if the funding were to be found unconstitutional, Director Chopra, who sits on the board of the FDIC, would no longer be able to participate in a vote for the forthcoming capital requirements that have been proposed. So what is some of the fallout we could see if this funding structure was rendered unconstitutional?
So it's everywhere. And I'll give you just one example. The CFPB is the one that designs and monitors all of the rules around mortgages, home mortgages. That's important for consumers. It's also important, frankly, for the mortgage lenders to have a very clear set of rules that says if you follow these rules, you can package those mortgages together knowing that they're safe and you can sell them on to other investors. That's how the mortgage industry works after that big crash in 2008. CFPB was put in place precisely because of the cheating in the mortgage industry that had brought down our entire economy. So you're going to love this part. As much as giant banks and the payday lenders have not liked the CFPB because it cuts into their profits, the mortgage bankers actually put in a friend of the court brief to say to the Supreme Court, don't mess around with the CFPB, because if you do, you could destroy the whole home mortgage industry. So anybody trying to buy a house, anybody trying to sell a house could find out that there's no longer a set of rules that apply. That means people can get cheated. It means you can't have a financing system that works and everybody knows that it works according to the rules. You could keep that up when you look at credit cards, when you look at student loan servicing, and credit reports right now. CFPB has just done a wonderful move on credit reports to try to get medical debt that is known to have really high error rates in it and not predict whether or not you're likely to pay your bills, to get that removed from credit reports. CFPB is doing work to help make sure that those credit reports, if they have false information, that they get corrected in a timely fashion. So it pretty much, if the CFPB got turned upside down, would touch the lives of everybody in this country.
And switching gears, Senator, House Speaker Kevin McCarthy was ousted from his speakership late yesterday. What are the implications here that you see? We've got another government funding deadline coming up in mid-November. Does it make it more arduous? And what does it mean for trying to get policy passed in this Congress?
You know, I think of this as we've got to focus on where the problem is. People say Congress is dysfunctional. Congress is not dysfunctional. We're doing our job over here in the Senate. We're working through our budget bills and other things that need to be handled. The problem right now is a handful of Trump loyalists over in the House who think that chaos, that hurting American consumers, that damaging our economy and undermining our standing all around the world somehow is going to help Donald Trump get reelected. And look at the difference now between Democrats and Republicans. Democrats had the House and the Senate and the White House in the first 2 years after Joe Biden was elected. And what did we do? We passed a huge infrastructure bill that's really paying off around the country. We passed the biggest climate package in the history of the world. We put in a 15% minimum corporate tax, $35 insulin. It started to cancel student loan debts, which, by the way, just this week, the president of the United States canceled student loan debt for more people. He's now at 3.6 million people who've seen some of their debt canceled. It's making government work on behalf of the people. What have the Republicans done since they've been in charge? In the year and a half that they've run the House, they nearly didn't raise the debt ceiling and put the United States government in default. And then last weekend, they nearly didn't fund the government to keep it open. And those are their two big accomplishments. Look, we got to have people in government who believe in making government work for the people, not just here to create as much chaos as possible because it might help Donald Trump.
Senator, we've recently just gone over the so-called childcare cliff, nearly $38 billion in funding for childcare that was put in place during the pandemic has expired. I know that you pushed to try to get a supplemental in for that in this last go around. With the next deadline coming up in mid-November for government funding, will you push again for a supplemental? And what is the appetite? Have you spoken with Leader Schumer about this? Given what's going on in the House, is there appetite to push this through?
So yes, I will be pushing. And yes, this is something that Democrats very much want to do. And I think we might be able to find some Republican allies if we can get the House up and functioning again. You know, I do want to say on this, we had a broken child care market long before the pandemic. It was hard for families to find affordable, high quality childcare. It just wasn't out there. And childcare workers are paid near poverty wages. Then during the pandemic, it all fell apart. And that's why we put federal money in so those childcare slots would be there as mamas and daddies were able to go back to work. What this funding cliff means right now is that we're at risk for about 3.2 million babies to lose their childcare slots in the next couple of months because there's just not enough money to pay their teachers for those children's slots to stay open. Think about what that means. How many mamas are not going to be able to go back to work? How many daddies are not going to be able to go back to work? How many can't go back to school or continue the classes that they're in right now? How many babies are going to be parked in unlicensed centers where they're put in front of a television set with a whole bunch of other kids in front of, in someone's living room? Look, we need to invest in our children. And that means we need to make high quality, affordable childcare. And we call it childcare. It's early childhood education. We need to make this investment for our babies. We need to make this investment for people who are working. We need to make this investment for the businesses that need those mamas and daddies to show up for work. And we need to make this investment in our childcare workers who are doing some of the most important work in our country and not getting paid even a livable wage to do it. I'm going to push for more funding for this long term. I have a bill where we're just going to say, look, we've got to make a long-term investment. No family should be paying more than 7% of its income in childcare. Those babies are an investment in our future, and that's what we need to do as a nation.
All right, Senator, unfortunately, we're out of time, so we'll have to leave the conversation there. But thank you so much for your insight and hope to continue the conversation on this important topic of childcare with you in the future.
Thank you.